Welcome to Market Unlimited. My name's Matt, and today we're going to talk about a popular dividend stock, Realty Income. For those unfamiliar with the company, Realty Income is referred to as a REIT, or a real estate investment trust. More or less, this is a company that has a lot of commercial real estate tenants that are spread across a lot of different sectors. Popular tenants include FedEx and Walgreens, among others. A lot of investors are attracted to this stock due to its high yield, which is currently around 5.7%. The issue is that in recent years, the company struggled despite its long-term performance against the market. So today we're going to take a look at the stock to determine whether it's a buy, sell, or hold, and go from there. If you guys are interested in this type of content, make sure you like the video, subscribe to the channel, and let's get started. So let's start off with the positives, and some of them have actually been pretty recent. So if we take a look at Realty's stock, we can see over the past week that it started to break out here over this resistance level, which is low to mid $53 range. So this is a good sign because it's starting to finally clear after consolidating a little bit after this sell-off had occurred. The other thing is it's not quite overbought yet, so potentially it could run a little bit further before it starts getting to the top end of this RSI channel. There's one last thing that I believe to be positive is that not only did we see it break out over resistance here, but we're also seeing it break out over the 50-day moving average. So right now we have two good signs that it's short-term bullish or potentially could be short-term bullish. Also worth noting is that this had happened on an ex-dividend date. So with Realty Income being a dividend stock, generally the stock will go down by the amount of dividend that's going to be paid out on the ex-dividend date. So the breakout actually occurred on a day anyway that it historically shouldn't. So a few things worth keeping in mind, but overall there's some concerns that we'll go over in a second. First concern that I have is that although the stock is broken out, we can see that there's a lot of near-term resistance that it may encounter. So we have not only a resistance level that's around $55, maybe slightly above, we also have the 200-day moving average, which is around the same place. So I don't anticipate that it's easily just going to break over this and continue its run. It may have a pullback once that level's reached. Also, as we noted before, the RSI is starting to get a little hot. So if it does continue to run, it most likely will enter the higher end of this channel, which would also signal that it may be due for a pullback. The other concern that I have is that the stock itself has been in a long-term downtrend. So even if it breaks above the 200-day moving average and that resistance level, we still have to look at this declining trend line. You can look at it from a few different angles. We could say that it may have started around January of 2023, or if we want to go a little bit further back, it possibly could have began all the way in April of 2022. If you include this and say maybe this was a false breakout in August. If we go back and we look at the entirety of all this, we can see that this is held up, this declining trend line is held up pretty well throughout that period of time. There's been several strong rallies. You can see here, 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 and here. And every time it's hit that level, it's pulled back and has set new lows. So I would say that this may be the main hurdle for this to clear because in the stock world, there's a saying, never bet against a trend. And this is a trend that's going back multiple years at this point. So we have a few different things that we have to keep an eye on. The near-term resistance around 55, which is the 200-day moving average, and also this declining trend line that historically has been holding up pretty strongly. My last concern has to do with the valuation of the stock. So to give you a feel for it, We currently have a PE that's around 43 compared to the S&P 500, which is 26. So, comparative to the overall market, which actually has been outperforming Realty Income, particularly recently, it seems to be expensive. Now, there is a factor of interest rates to where if interest rates drop, since it is a REIT, that could potentially help the valuation a little bit. However, there's a huge gap between the current valuation and just the broader market itself. I don't really see what could be a growth catalyst for this that, where they could quote unquote grow their way out of this. But there's a lot of moving parts, so maybe there's something that we're missing, but just looking at the snapshot of where it is now, it just looks like there's a huge spread and it's expensive, and other REITs are trading at much lower valuations. So I guess it's up to the individual buyer whether, the name itself is worth that type of premium. So wrapping it all up, is Realty Income a buy, a sell, or a hold? I'm going to rate it as a hold. To me, the valuation seems rich compared to the S&P 500, and I see a lot of overhead resistance with the 200-day moving average around $55 as well as that declining trend line around $57. If it does happen to have a strong rally and reaches that declining trend line, my rating will change to sell. To me, it's going to be guilty until proven innocent. But what do you guys think? In any event, if you enjoyed the video, make sure you give it a like and consider subscribing to the channel. And until next time.